At 31, 2020, I have a weekly chart in our platform, Panther, right here on the Dow Jones. I'm giving that weekly market cap. But let's talk about one thing. This is going to be the main bar right here, right now, in our system. I will show you a public chart and what it says versus what our mathematical market making system says on the Dow. So 27,000 was this major downside that we were early in the pandemic, and that was on March 2nd, weekly start. Then it went down and we came back up. We know the story, but here's the deal. I'm going to go and I'm going to hit the diamonds right now live. And happy weekend. It's at the end of the month. There's going to be a lot going on. There's going to be a lot of headlines, a lot of rioting over the weekend, a whole bunch of stuff been going on. And we're just going to talk about it in technical terms. And then later in the afternoon, we're going to update what U.S. markets will be doing tomorrow morning on the opening bell. Right now, we're going to take a look at the weekly. We're going to take a look at that diamond value. We're going to have major resistance. I'm going to go here in our system and I'm going to hit 2 deltas, 3 deltas. There we go. I've got that drawn. Now we're going to talk about where the Dow could go up to. We hit our target right around 25.7. So we pull back. That is a 20-week moving average. That is declining. There's no doubt about it. When we go back to this bar, half of that value bar on the Dow, we opened at 25,590. So basically, this bar that was on 224, that was up around 28,000. But we know that we're not going to get to this half bar right away. So we can only deal with the weekly, and it's going to be this one right here. And basically what we're going to talk about is that when we come up, the Dow is in good shape, but we're going to end the calendar month. And either buyers are stepping in with people going back to work. There's going to be a lot of headline events. We just got done with the expiration. We came off the Memorial Day weekend. We did all of that. And we called it every day, right down to the wire. And at the end of the day, Friday, Trump had a speech about China. And he didn't go into any negatives. So the market rallied up going into that 15-minute close, which was a Friday options expiration. Let us not be confused where it really came from. It came from that. We'll be talking about the S&P and the indexes and what happens and why they can go higher, and they can. And we'll be taking a look when we get to the 26,250 mark. That's going to be part of this wick right here. Once again, that is going to be our next upper end target. And if we can get through that, then what we're going to be looking at shortly thereafter is 26,678 on the Dow. The Dow's had a very impressive weekly gap last week. It was typical Memorial weekend. It's typical seasonality, early pre-market summer rally. Summer starts June 20th. It's coming now. There's going to be more volatility. A lot of the easy money has been made. Can the markets return to where they were in profitability and higher reads? With all this rioting and everything going on around the country, we're going to find out. I will know later exactly how U.S. markets are going to respond. I'll be looking at my Asian markets and other world markets and many other things. But we will have those updates. So our upper end of the target is going to be 26,250. We have shorter term targets that we still have to clear. And some of these targets are going to be 26,196. We're going to have 26,081. And we're going to have to get above 25,944. We have to get above that number to keep this rally rolling in our system. And it won't be wrong, and it never is. The system behind you is a weekly chart. And one of the things about this is that on the Dow Jones, what the public would look at is that we've had a declining 20-week moving average, which is slightly crossed over the white line. And that white line is very significant because what it's showing us is that the body of the weekly movement has come up the weekly memorial gap, clearing above these weekly moving averages. And like I said, we're going to have to get above 25,000. Let's just call it 25,000. This is very short term. Let's just say 25,987. That is the number right there. And that number has to have a weighted closing price above that for the Dow to continue to go higher. If we break above that, that is 100-week moving average on the Dow. Now remember, the Dow is only 30 stocks and they move differently. And it does have a weekly buy signal. And it does have some weekly longer term improvements, and it does. It's just that it's ran really fast, but it's not overbought. Even at these levels, believe it or not, with the price cycle. They're up there at resistance, don't get me wrong, everyone, when you look at what the public looks at. We don't make our decisions on this, but we do share it with you. And one of the things that is disturbing, though, is even though that we had the gap and we had the rally, that 20-week moving average still keeps dropping in value. The common denominator value of the 20-week is descending. It is not going higher, nor is it stopping. So that means that when you do clear above resistance levels and you have those going on, it's easily to drop back below those levels. But if we can consolidate and run and burn it up and run up to our 50-week moving average, which we do have a target at 26,449. And we would love to share that with you, retail public, that look at the Dow. And that would be reference to 50-week moving average for you people. And yes, the Dow has a weekly buy signal and it increased. So the weekly previous week is what we're covering right now. And it was a 4-day trading week, Memorial Weekend. Once again, this is what the public has to look at. They don't know how to use the indicators. We do. We own the mathematical script to indicators that were written and how they wrote them. Well, the public will never get to see that document unless you want to learn that and become an expert in the 5 technical indicators like that on a mathematical level that would put you above what we call retail analyst level. You would be with that training here. Oh yeah, you would. And you would have the information that the rest of them don't have. And that is why you would be above them all. And that's what this is about. Let us take you down the road of this weekly Dow chart. It's what the public looks at. It's public interaction. 85% of the volume is done with the algorithms and machines in the market. Then you have your hedge fund managers and institutional managers dipping in there. And then you have the lower end of the regular public sector, the very uncertain individuals who don't know what they're doing and how to capitalize and make in a market. We will let you know how this Dow will open up in the morning a little bit later today. We are doing the Dow Jones Market Weekly Recap, Memorial Week Recap. And it started with a weekly opening bell gap on Tuesday. We ran up, we put that little wick up there, we came up, we cleared some resistance levels over here. This is what the public is going to look at. They don't have nothing else to look at. They don't have a market maker app on a weekly level like we do. And we know what the diamonds are, and we know how accurate the lines are. We know what the mathematics are. We know what that means, and then how we're going up into resistance levels. And we do have room now to pull back and set up, but there's going to be a lot of volatility, a lot of headline events. There's going to be a lot of things going on. Right now, everybody wants everything to be normal. They want markets to have the same evaluation, but the problem is there is some economic problems in there, but we could care less. That is behind the curtain. What is relevant is price action here, now, where we're going, what your training is going to provide for you, how you're going to capitalize on markets, how you can change your life by being here. And if you're not here, you will not advance. This is not retail. This is a market making firm. We have the free 5-day trial. We're letting you know what it looks like. I will also let you know as we conclude the Memorial Week update. Let's go ahead and throw it on a daily for the rest of our thing. This is the previous week when I said that we were going to go up and test, and we went right to the penny, pal. Yeah, we did. When I said we were going to 27,050, we went to 20,758. That's, $8 above what I said a week ago. But last Memorial Weekend, when you look at it on a daily level, here's the disturbing part. This is a daily moving average. This yellow line, it's a 100-day daily moving average that's declining in value. It didn't stop. It's still declining in value over 100 days in price action, 100 days. People don't know how to use moving averages. You don't. You want to learn how to master them. We have a mathematical system with them that you can't find nowhere else on how to really use them and what they mean. So on a daily level, we got to stay above that 100-day moving average and consolidate to break out higher to get up here to our other daily moving averages, which is going to be the key one, is going to be that 150-day moving average right up here. And that would be the key. But right now, you can see on a daily level what the Dow did on Memorial Week. It started with that gap down. They came in. We made the high the previous week, as I said we would. And we did. And those are the facts. Let it be real. Now, we're going to see if we can go and break previous week over here, 528 day, the daily, the 528 daily here. We're going to see if we can break that 25,758 on the way up. And I will let you know. And this is what it looks like on a daily. So far, the daily on the Dow is that the daily buy signals that the public looks at, maybe they don't know how to use it or not. I know they don't, because everyone's looking at the same thing. They don't know the math behind it. You only know the front end of the map, but you don't know the math behind it. You want your technical analyst degree? Then sign up today. Here we are, declining in value. We start with the gap down. That's when they start to change. But we do have a daily 10-day moving average down here on the Dow. And, like I say, it wouldn't be out of the ordinary. 24,000, let's just call it 24,670, and we test it. Bing! But we're going to find out what that gap opened up. I'll let you know what the markets are going to do, and we got to take out that high on the Dow. This is the weekly update. This is not what's going to happen tomorrow. What will happen tomorrow will be updated later. But this is what the price action was for Memorial. We made the high the previous week, but that was Memorial Week gap down versus the weekly chart. And we showed it to you in our Panther. I'll be happy to show you a daily chart in Panther as well, and it looks just like this. There's that daily reversal here. I'll blow it up for you. And here, let me pull this up for you. This is to all our market makers and their market maker updates to their clients. Here we are. There's the high on 528. We hit it. Here's that low reversal that we said would happen, and that low was 25.31. So it was a nice reversal off of the high to these lows. But see, here's the deal. That low was 25.031, all right. And then we bounce back up, and then we go ahead and we are going to whip it out on the 29th there. We're going to say that we closed out at 25.83 and whatnot. So I'm going to hit the diamonds here, and it looks like this in the daily and whatnot. So the fear indicators have been coming down in the exchanges as well in your Dow and whatnot. So it's very important to understand where the diamonds are, where the resistance levels are going to be. And they're right here where we're saying we're going. I even said it before I even pulled up the daily. There's 26,500 right here in this bar, man, on 3-5. There it is. And we are going to be challenging this area where these diamonds are, and that's going to be resistance. That's the bottom line. If we can clear them and consolidate above them, then we could and will go higher in the Dow, but that will come at a later date when I give you that date. I'll give you that update if that happens. Right now, we're dealing with the daily. This is going to be the resistance on the way up. You're going to have to get above that 25,978. And, there are a little few areas in there before we can get up here. But here it is on a daily, on the Dow. This is the update, 531. Daily, Panther, Market Maker app. Diamonds are algorithms. They're mathematical. They don't lie. And they don't. And you can get big moves, 225 points per line. That's how that volatility, but it is not wrong on the Dow and the Dow Jones. Once again, it's our conclusion. Stay tuned for the next update later in the day, and we'll talk about what we're going to be doing. This is the weekly update. We want all of our people around the world, different people on different networks that are watching us all the time, go ahead and study this and listen to this carefully and then watch the markets.